Trending indicators often perform poorly in ranging markets, and you might be wondering why that happens. Well, it's because these indicators, like moving averages, do a great job when the market is trending, no doubt about it. However, the moment the market starts ranging, moving sideways, it tends to give off a ton of false bullish and bearish signals. This can end up causing you to lose money, and we definitely don't want that, right? So how can we avoid this issue? One effective solution is to incorporate the volume of the price into our analysis. Volume is a crucial factor that helps to gauge the strength behind price movements, and when we bring it into the equation, it can drastically improve the accuracy of our trades. To do this, you'll need a trend indicator that seamlessly blends both trend and volume. This is where the volumetric VD indicator comes in. This powerful tool doesn't just show you the trend, it goes beyond that. It also shows you the volume at different levels of that trend. So in this video, we're going to break down what this indicator is, how it works, and how you can use it to make smarter trades. Let's dive into it. Getting started with this indicator is simple. First, head over to TradingView and open any trading security that interests you. For this example, I'll be using the 15-minute time frame of GBPJPY. Next, click on the indicator search tab, type in volumetric variable index, and you'll see an option by Big Beluga. This is the all-powerful volumetric variable index dynamic average indicator. It's quite the mouthful, so for the rest of the video, I'll refer to it simply as the VIDIA indicator. So what exactly is the VIDIA indicator? This tool is designed to provide traders with a dynamic view of market trends along with volume analysis. It combines the adaptability of the variable index dynamic average VIDIA with volume analysis to give you insights into both the direction of the trend and the strength of the price movement. In short, it helps you identify trends in the market and visualize the buying and selling volumes within each phase of the trend. This is important because the volume behind a trend can tell you a lot about how strong or weak that trend is. Now, let's break down the components of this indicator. The first and most obvious feature is the VIDIA line, which forms the trend cloud. Whenever the VIDIA line is green, it indicates a bullish trend. If the VIDIA line turns red, that means the market is bearish. To help you spot transitions between bullish and bearish trends, the indicator also includes up and down arrows. A green upward arrow signals the beginning of a bullish trend, while a red downward arrow indicates the start of a bearish trend. Another key feature of the VIDIA indicator is the volume table. You'll see labels for buy volume, sell volume, and delta volume. Here's how they work. Buy volume tells you the total volume of all the bullish candles during the current trend. Sell volume shows you the total volume of all the bearish candles during that trend. Delta volume is simply the difference between the buy volume and sell volume expressed as a percentage. Now that we've covered the basic components of the VIDIA indicator, let's talk about how to use it in trading. But before we get into that, let's quickly look at the indicator settings. The VIDIA length controls how long the indicator looks back to calculate the moving average. A shorter length makes the indicator more sensitive to price changes, which can lead to false signals. A longer length gives a smoother trend line, but may lag behind price movements, so it's about finding a balance. The VIDIA momentum setting controls the number of periods used in the smoothing of the trend cloud. This helps adjust the sensitivity of the indicator. The distance factor for the upper and lower bands controls how far the bands are placed from the VIDIA line. Higher numbers place the bands further away from the price, which works better for volatile markets, while lower numbers bring them closer, which is better for stable markets. You can also customize the shadow colors or even disable the shadow. Entirely the shadow is the trend cloud itself. Once you've adjusted the settings to your liking, click OK to apply the changes. There are two main ways to use this indicator, depending on the market type in a trending market and a non-trending or ranging market. Let's start with trending markets. In a trending market, the VIDIA indicator serves two primary purposes: trend identification. If the trend cloud is green, you know the trend is bullish. If the trend cloud is red, the trend is bearish. Strength of the trend. This is where the volume table comes in handy. In a strong bullish trend, you'll see a delta volume greater than 50%. This tells you that the market is firmly in the bullish phase. From my experience, whenever the delta volume exceeds 50%, that's a good indication of a strong trend. For example, let's take a look at a strong bullish trend where the delta volume is 65%. This is a clear signal that the trend is strong and the probability of profitable trades is high. The higher the delta volume, the stronger the trend. In fact, the delta volume can go as high as 200% in rare cases, though that requires a sustained series of bullish candles. However, if the delta volume is low, say 12%, like in this moderate bullish trend, it means the buy and sell volumes are almost equal. This trend is weaker, and trades might take longer to hit their take profit targets. When the delta volume drops below 10%, the market is likely transitioning from a trending market to a ranging market, so you'll want to be cautious. For bearish trends, you want the delta volume to be negative and as far from zero as possible. The more negative it is, the stronger the bearish trend. If the delta volume starts to increase and moves closer to zero, it signals that the bearish trend might be weakening, which could be a sign of a potential trend reversal. This brings us to another important application of the VIDIA indicator trend reversals. If the delta volume starts shrinking towards zero in a bullish trend, it's a sign that the trend could be reversing soon. That's your cue to start exiting any long positions. On the flip side, if the delta volume becomes less negative during a bearish trend, it's a sign that the trend could be weakening. Now, let's look at how this works in a non-trending ranging market. In a ranging market, the trend cloud might still show green or red, but if the delta volume is close to zero, that's a strong indication that the market is ranging. For example, in a scenario where the trending cloud is green, but the delta volume is only 2.43%, it tells you that the market isn't bullish, it's just moving sideways. If you were to follow the indicator blindly, you probably end up taking a losing long position here. The key takeaway is that in a ranging market, the delta volume will be low, and it can even go negative, regardless of the color of the trending cloud. In such cases, you should avoid taking trades because the market isn't showing clear bullish or bearish strength. Let's wrap up by looking at a simple method to trade with the VIDIA indicator. For a long trade, first, make sure the trend cloud is green, signaling a bullish trend. Then look for the price to retest the most recent pivot low. Once the price touches this level with a wick, it's time to confirm the trade. For a valid setup, ensure the delta volume is above 30%. If everything aligns, go ahead and take the trade. Set your stop loss below the entry candle, and your take profit should be at least 2 times your risk. For short trades, just reverse the process, look for a bearish trend. Wait for the price to retest a recent pivot high, and make sure the delta volume is sufficiently negative. That's all for today's video. I hope you found some valuable insights on how to use the VIDIA indicator for better trading decisions. If you enjoyed this video, don't forget to hit that like button and subscribe to stay tuned for more tips and strategies. Thanks for watching, and I'll see you in the next one.